Hello and welcome to the forum. Every week, we take no more than 15 minutes to discuss the 3 highest conviction ideas surfaced across the Smartkarma network, cutting through the noise and helping you zero in on what truly matters most. The live forum and Q&A session are exclusively available to Smartkarma Plus subscribers. You can always revisit previous episodes on this YouTube channel. Without further ado, let's dive into this week's ideas.
Good evening, everyone. Welcome to the Smartkarma Weekly Forum. The forum is meant to be a high-impact live webinar that we host on a weekly basis, exclusively for Smartkarma Plus subscribers. We use this as an opportunity to discuss some of the best, highest conviction insights and ideas surfaced across the network. The forum is meant purely for informational purposes and does not constitute investment advice. It is the opinion not of Smartkarma, but that of our insight providers. And lastly, Chatham House rule applies. Please do not share the contents of the forum on social media without express permission. Every week, we try and look at 3 key topics from the platform. They tend to be typically small caps, large caps, thematics that we like. We also post recordings of the forum on our YouTube channel, so that you can look at forums from previous weeks, or in case you've missed the forum, you can catch up on it and also share and discuss it with friends. Last week, we examined a very interesting corporate restructuring exercise being done by Olam, one of the largest agri businesses in Asia, if not globally. We also examined what the Ukraine crisis means for Asia and Asian markets. And lastly, we took a special deep dive look into cybersecurity companies and how they might be favored stocks for the time to come, whether there is war or there isn't war. Today, we're going to actually revisit some of the old ideas and give you a heads up. The first one would be PC Partners. This has been an old favorite on the forum. And we have results coming up for the company tomorrow. These are going to be important results, and we're going to preview them for you. Second, we will look at Rex International. Again, this is a name that we've covered before, and we're going to revisit this. One of the other reasons why we revisit ideas is just to keep us also honest and on our toes, and also to make sure that there is great continuity and follow-up on the ideas. You know, the forum is not meant to be one new idea every week, but it's really meant to be a follow-through of conviction over a longer period of time. And lastly, the third thing we're going to look at is the subtle yet significant shift in how China is now approaching the COVID situation and how, the sort of restrictions they're enforcing. Now, just a little word of advice. If you have questions, you can ask them at any point of time during the forum. Just use the Q&A button. Also, if you do not want to ask questions now, or if questions come to you late, please just post them on the Smartkarma platform as discussion points, and the respective analysts will get to them. All right, so let's kick it off with PC Partner. So the ticker for this is 1263 Hong Kong. The market cap is about $500 million US. It trades just under 4 million US a day. And this is a stock that has been very well covered by Nick van Broekhoven. And those little green circles on the share price chart tell you his calls. Now, the stock price has corrected quite significantly from close to $18 all the way down to maybe $8, and now started to go back again. So let's take a closer look at what's going on here. Just a little bit of a recap for those who might not know PC Partner. So PC Partner designs, develops and manufactures graphics cards. It is a core component supplier to NVIDIA. NVIDIA, of course, is one of the largest companies in the world, one of the biggest tech hardware plays. And for those of you who have heard and used the FANG acronym before, they would be quite familiar with this too. Now, what is interesting with PC Partner is this. So PC Partner has already informed us that their profits for the year 2021 are going to be up quite big. Net profits would be up at least $2 billion, which would be a tenfold increase year on year. What's more interesting, perhaps, is that at the time this profit alert came out, the year had not ended, and hence there is room for profitability to even exceed this level. Next, Nick notes in his insight that this is the 10th year anniversary since listing for PC Partner, and as such, there is a good chance that the company decides to pay out a special dividend. If that happens, then the total dividend for the year could be, even close to 3 Hong Kong dollars against a share price of about 10 or 11 dollars today as we close. That is almost a 30% dividend yield. Meanwhile, the year has kicked off very well for them. Demand remains strong for their products, and the pricing environment remains firm, at least for now. Slightly more medium to longer term, PC Partner would be a potential beneficiary of metaverse adoption, because most metaverse applications are going to require high-powered and expensive GPUs. Nick had put out a fair value estimate of about 18 Hong Kong dollars. That is significant upside from where the stock closed today. Of course, the stock has room to trade a lot higher, because if you actually do the numbers based on that profit, the stock is trading merely on about 2 times PE ratio. So this is one of those unique companies that's on low single-digit PE, a lot of net cash on the balance sheet, and significant profitability, and also very minority friendly given the way they pay dividends. I'll move on to the next. This is REX International. The ticker is REXI space SP. This is a Singapore listed stock. Market cap is just under 400 million. This is perhaps the only pure E&P company, so oil exploration and production company on the Singapore stock market. Trades on a very, very low PE ratio. We'll get to that in a second. Again, you'll notice on the chart that this is a stock that we have followed and tracked for quite a while, and the share price has more than doubled over that period of time. Well, the stock trades nearly $8 million a day, which is a big number for a small cap in Singapore, so it's very investable. So let's take a closer look. I mentioned this is a oil exploration and production company. It's an extremely cheap stock. This company is generating an EBITDA of about $150 million roughly, adjusting for any accounting treatments, and that is against the market cap that I had mentioned of about 340 million. So once again, this is like a 2 times EBITDA stock, very roughly speaking. Now, with oil prices where they are today, it's generating significant amount of cash flow. The business is entirely unhedged. This cash is accruing at an incredible pace on the balance sheet, and hence there remains tremendous room for this company to pay very large dividends or do buybacks. Other things that Nick has discussed before was a move to the main board, which happened this month. So this is again now the only pure play oil and gas exploration and production company that is on the main board of the SGX. None of the local brokers really cover the stock right now, but that could change. Of course, none of the international brokers too either, and that could change too. And next is, if you take a closer look at the age profile of the founders and the management team, it is quite likely that they undertake some significant corporate action in the form of exits, in the form of maybe even M&A, but there is significant catalyst activity that's possible on the horizon. Okay, I've got a question coming in, which I'm going to take here. The question is, will REX be shunned by institutional investors due to ESG concerns? Well, to be honest, none of them have really owned the stock, so we don't really care. But most oil companies are now increasingly being considered by ESG funds. The reason is that oil and gas exploration in of itself is not a bad thing. The way it's done is important. Secondly, we all know that even for the world to migrate to renewable fuels from fossil fuels are still required. I think people are starting to realize that there were some big fallacies and gaps in their understanding of ESG. Energy remains severely underowned globally by investors, and it's actually the sector that's outperforming the most as well. So to be honest, at this stage, we don't really care whether large institutions look at REX or not. Put it into context, this is a $400 million market cap company. This is the time when smaller investors, family offices, high net worths pay more attention to this. And it will be a while before the larger institutions really get involved. Okay, I'll move on to the third and final topic. This is a key thematic. We think it's a very important thematic. Everyone has assumed that China is, has a zero COVID policy, and that might never change. People are making all sorts of assumptions at the moment that there should be no relaxation until perhaps November when there are important Congress meetings. But, we feel we should look at the reality of what is really happening. Now, Li Tang is a China strategist who covers policy very closely, and he wrote on this just over the last 7 to 10 days. This was very well read, so we're featuring it today. What are the key points? So the first is that the National Health Commission, this is NHC, published a revised COVID treatment guideline. As I mentioned, this was done very recently in the last 10 days. The changes are quite important and should not be ignored. The first thing is mild cases no longer need to be hospitalized. Instead, they can just be quarantined. The quarantine period is now 7 days instead of 14. 2 COVID treatment drugs have been added. One of them is Paxlovid by Pfizer, which has also been introduced into the Singapore market. Premier Li said that the government will continue to dynamically adjust policy. So it is no longer zero COVID. It is definitely something else. It's a dynamic COVID strategy. And we think that this is basically a slow but certain exit from that zero COVID stance that China has taken for the last 2 years. We all know that a reopening of the market is going to be a significant boost to GDP. And this could come at a time when people are talking about China slowing down, GDP growth coming down to 5.5%. So this is ammo and arsenal that they have in their back pocket now. Now, this has huge implications on the whole region. It will have implications on travel, on tourism, on demand for all sorts of services. And it will also, be bad for certain things. Chinese consumption of certain types of products has been elevated just because they've not been able to travel. Once that changes, you will also see a shift in that consumption behavior. So we're following this very closely. This is going to be a core thematic over the course of the year, and we'll keep you posted. With that, I'm gonna wait for about 10 or 15 seconds if there are any further questions. If not, we're going to conclude the forum and look to answer your questions on the platform itself. Okay, since there are no more questions, thank you very much for attending. We'll speak next week. Bye-bye.
That's it for this week. You can find more ideas like the ones we discussed today on demand on our YouTube channel. Remember to subscribe and hit the notification button. If you like these ideas, spread the word. Tell a fellow investor about Smartkarma Plus and follow us on social media. Just search for Smartkarma. And of course, don't forget to visit smartkarma.com for more independent, differentiated investment insights. Thanks for watching and see you next week.